What's up, team, and welcome back to another episode of the Sunday Stock Show here with Lucas. Today I'm going to be talking to you guys about my top 3 picks for this week. I have to apologize for last week. I missed our Sunday Stock Show. I was a little sick. However, today we are back, and I hope you guys take advantage of these picks and at least do your due diligence on these picks as well. Make sure you guys do an in-depth analysis, set your alerts to make sure you guys are efficient with your own trades. Alright guys, so as always, this video is for entertainment purposes only and it's sci-fi time, so let's get into this. Alrighty, so the first stock that I want, but actually before I get into the stocks, I wanted to talk about the markets for a second here. So if we come and take a look at the S&P 500, the SPY here, its index, I just want to keep you guys aware of this, that they are currently, all 3 markets actually, but looking at the SPY, it is at all-time highs right now. So we are getting to overbought levels. So do your due diligence and be prepared for a possible potential pullback either this week or in the coming weeks, because it does have a tendency to do this. Every time it hits an all-time high, it does pull back, right? So we've seen this in the past month. It was a little bearish, and then we did have quite a reversal, and now we are back at all-time highs, but I do expect there to be a pullback relatively soon. Now taking a look at the NASDAQ, again, this is extremely bullish right now, but again, there is a possible chance of seeing a pullback coming forward. So, with all that in mind, keep in mind that COVID is relaxing down now, so stocks are starting to boom again. Pfizer just came out with their new pill as well, saying that we might not even see any COVID pandemic in the United States as of 2022. So a lot of stocks are starting to boom, especially when looking at the travel industry. So all the airline stocks, a lot of hotels, and cruise lines. If you go take a look at any of them, they're all up anywhere from 6 to 10%. So keeping that in mind, let's go into it and let's take a look at our top picks. So for this week, my top pick is going to be PayPal, PYPL. What do I like about them? Well, they have been selling off. So generally we do look for a stock that has been bullish. However, PayPal is a very good company, but I do like where they're sitting right now. They're sitting at a very strong support level. All right, they're sitting right here at about 225, a support that we've seen it touch very often in the past, and it always tends to reverse upwards. All right, so that's one of the things that I do like. Something that I want to tell you guys to keep in mind is that they do have earnings coming up. All right, so with these earnings, this could be a risky move, that it could potentially break this support level and sell off, continue selling off. If it does sell off, well, it has a potential chance of coming all the way back down to about $210. But if their earnings are good, or if you want to play them till their earnings, well, I do expect this to begin to reverse back upwards, and it does offer a very healthy return. Somewhere, I assume this will come back to about 245, if not go to new all-time highs, but playing this reasonably to about 245, that's approximately a 9.5% return. If we were to pull up to its next resistance point, which is at 272, that offers almost 21% return. So definitely keep them on your watch list. The next one I want to talk about is YELP. So YELP. Again, this is a stock that's been consolidating for the past couple of months, really. So it hasn't done very much, but I do like this as a trade, because you can see a clear support line and a clear resistance line. So basically just trading it between those 2 lines is where the money is to be made. If we were to draw a line right here at about $37, $37.50, that's our support line, and then we can draw ourselves another line up here at about $40 a share. So YELP just had earnings. They beat their earnings with great earnings, actually. Their EPS was great, and their revenue growth relative to last year was great. However, they ended up selling off at the end of the day and finished down 4.5%. In the pre-market, they were up about 5% and ended up selling off throughout the day. So what do I like about them? As I mentioned, they are sitting right here at about $37, $38, and I do expect it to just pop back up to about $40 a share. I don't expect it to go much higher, but just do an intraday trade on this or a little swing trade, which offers you approximately 4.70% return. This is an options play, would be very profitable. All right, on stocks, maybe not so much, but it still is a relatively safe return and something that you could see calculate very easily. If they were on Monday or this week are to break this support level at $38 or $37.50, and they're to break this support level and continue selling off, well, I do expect them to come down to about $35, which then I still really like this trade. I like it to eventually pull back up. So you could then average down or gradually enter into your position. All right, but if it does come down to this $35 level, I do expect it to consolidate for a couple of days. So just be vigilant with that and make sure to keep your alerts active. Now, the last stock that I want to look at is PLBY, which is Playboy. This is one that I actually wanted to talk about last week. Unfortunately, I didn't, but it ended up being up 6.5% on Friday, which is a really good return. What do I like about them? They were previously very bullish and then sold off for several months, found themselves a support here at about $23, and have recently been pulling up. So one thing you want to keep in mind is, again, they do have earnings coming up, so that could be a risky play. As we know, earnings could be very volatile. It could either be in your favor or work against you. So what I would do in this case is play them leading up into earnings. I wouldn't necessarily hold this through earnings because it could sell off drastically. But if you want to play this into earnings, as we could see over the past couple of weeks, it has been pulling up, right? Hitting higher highs and lower highs. So what do I see this going up to? Well, it just broke this little resistance that we had here at about $29 a share, $30 a share. We broke it, so I expect this to come up to about $35 a share. So going from 32.5 to 35 offers approximately 8.5% return, which again is a really good return for a stock that's showing some good signs of a reversal here. So as always, guys, if you guys enjoyed this video, please make sure to like, comment, and smash that subscribe button. It does help out the channel, as well as you guys can throw any stocks in the comment list and I'll make sure to do an analysis or send me a message privately and I'll make sure to keep an eye out for them. So as always, guys, make sure to set your alerts to be effective and don't necessarily buy the dip because it could continue to dip. If you do, wait for that reversal and gradually enter into your positions, scale your way in and scale your way out, and make sure to lock in profits along the way. Have a good weekend, guys, and I hope you guys enjoy the rest of your Sunday.